Hey, I'm just excited that we're able to get together and share this, share information with the community. We always have these conversations, and one of the biggest things that I'm running into now, as it relates to the home buying process, is a lot of my buyers, they have funds saved, but just not quite enough in order to move forward with the home buying process. What are you seeing on your side? And, what are some solutions that you have seen come available for potential buyers?
Yeah, it actually is a universal issue. Um, Clients just don't have the funds saved, like their parents or their grandparents had. You know, um, with the economy, it's just a little difficult. People are finding that it costs the same amount of money to eat out as it does to buy groceries.
Oh, yeah.
So yeah, so with that being the case, we're being a lot more creative with ways to um, fund loans, as far as solutions, uh, and, and as it relates to program offering. Some clients, they come in and they say, "Hey, I want a conventional loan. I heard, that's the best way to go." And they find that, it's better for them to go with an FHA loan, because of the interest rates and, being available, and a lot lower. You have cases where you may have a client that you qualify for the FHA loan, but they found a house in a rural area, so they're able to, consider the USDA loan product, which is 100% financing.
Yeah. So tell us a little bit more about that USDA product. How does that look? What are some of the requirements for that?
Okay. So with the USDA, of course, it starts off that the property has to be in a rural or suburban area. There is a geographical location eligibility requirement. The program does have income limits, but the income limits are pretty decent, for today's economy with the families that we service. Those income limits and those geographical areas will permit the client to do a 100% financing.
Oh,
So that particular product would not require a down payment. And then with the rates being very low and reasonable, it will minimize the closing costs as well. Now, closing costs is going to typically be around the same for any loan as far as percentage wise. So we normally estimate 3 to 5%. But at least with the USDA, you have some funds left over, after you have considered the 100% financing. And then also, with us being here in Texas, our earnest money deposits are typically 1%. So I always advise the clients that when you are, contracting on a property, you already have 1% of your closing costs tied into that property going right into the deal. So you would have the USDA at 100% financing that covers your down payment, and you already have 1% of your closing costs reserved towards that purchase.
wow, that's awesome news. You know, I definitely have some clients that can benefit from that particular product. That's really good. You
It's
know,
really good. Yes, it is really good. With this secured and that your mortgage is being covered. So the USDA has done uh, tremendous service to this community by making those products available.
wow, that's awesome. Like I can't wait to share this with several of my clients that are look in the process of looking, and that may be a definite option for them.
Now, of course, that's not going to be everyone because most people don't want to live in rural areas, you know. So I do explore those options with my clients when I am considering product offering. So if for some reason, the USDA loan product is not going to work for them with the location that they want to be in, or maybe they are a little bit over the income limits, so they don't definitely fit that mold. You do have the FHA products that offer 3.5% down. Those products can also be paired with a down payment assistance program to assist with some of those funds. You can even pair that down payment assistance program with paying your closing costs. So say, Melanie, I have the down payment, I don't have the closing costs. So you can look at it from that perspective and
Wow.
pair it that way. Those programs do carry a little bit higher interest rates. However, it is a solution, to a larger problem, which is people just don't have money.
Right, right. Yeah. Just with the, like we said earlier, just with the price of going to the grocery store, the gas station, those things are increasing and we're not seeing that paycheck increase. So
Correct.
that's been a struggle for a lot of my clients. It's just, hey, LaShonda, I want to buy a house. I'm ready, but I'm trying to gather those funds in order to do that. Now, when you were talking about the down payment assistance program, um, so is there like an income requirement for that particular program you're talking about?
There are some programs that do have income requirements. With the mortgage calculator, we actually work with a national program that does not have income requirements or first-time home buyer requirements. So it's pretty broad. It does have a credit score minimum. So of course, typically that score is going to be somewhere in line where most of our clients fall into anyway. So I think it's a really great program. We try not to be restrictive so that we can have a solution for the borrower. There is a forgivable option along with a repayable option, for those, where one may not work over the other, or, someone wants a comparison shop when they're considering their mortgage. But it is definitely available to the majority of the clients that we serve.
So what it sounds like, really, my clients need to, once we go over that home buying process and we establish this is what we want to do, they really need to connect with the loan officer in order to get the information they need that is specific to their specific financial situation. What
Right.
applies, where it being the area they want to go in, their income, their timeline, all of that. They just need to really get with the loan originator and get that information specifically not catered, but custom to them. So
That's correct. Yeah, it is important because there's a lot of properties, beautiful homes. You want to be able to know that the one that you are interested in or that is suitable for your family, you can afford. There's a lot of factors that go into determining a mortgage payment, and we want to make sure that it is going to work with your income structure. And also, your family dynamics. There's a lot of stakeholders in this decision making, regardless of how many people are on the actual loan. So yeah, it's very important to meet with a mortgage loan originator. Get that information to them. Be very honest about your income situation. Your finances, your bills, so that we can make an accurate decision about you're transitioning into a home buyer.
One other question that I'm often asked is about, hey, LaShonda, I am an entrepreneur. And I want to purchase a home, but how do I go about that? So, can you give us a little overlook of how that looks for entrepreneurs?
Yes, absolutely. So, for entrepreneurs, those self-employed persons, it doesn't prevent you from buying a home because you're self-employed. There's some additional financial documentation that we will review. And then based on that, we will determine, which loan product best suits your situation. Because you have people who make their money, they put it in a bank, they record all of their finances, they file their taxes, and they claim the necessary expenses. And, that is sufficient in order to qualify. Then you have some persons that they just have a lot of money coming in, it's being deposited into their bank account. They may have had some challenges with accounting, but I do have proof that I do make the money, so we may consider, some alternative funding methods for that person so that they still qualify. So that typically you can either go the standard conventional FHA, USDA, or you may have to go into an alternative type program like a bank statement loan or a P&L loan. So there are products for everyone. And, of course, that's why it's important that a mortgage loan originator, sit down and discuss that with you so that you know that you can still continue to function in that business and be a homeowner. And, we will make sure that we assess, that you're going to be able to afford it.
All right. I mean, all of this is great information. I really appreciate you joining in with me today and having this conversation about the home buying process and from my perspective, the questions and the challenges that I am running into as on a day-to-day basis as while I'm talking to my clients and really understanding it from the mortgage perspective of things that are, things that are available out there if you're looking to purchase a home. So thank you so much for, just getting with me, answering questions. You have anything else you would like to say?
Just want to add that, it's very important, that honesty, being completely transparent about where you stand financially is going to be a huge impact on qualifying for a mortgage. You want to be able to go and see that property, like I stated earlier, the one that's going to be suitable for your family. And we want to ensure that, your home buying process is successful and stress-free. We're going to run into those opportunities where we may have a moment of, sigh. But we always overcome those things. And those are just general pain points during the process. So no one should be in fear of, what the loan officer is going to uncover or what they're going to find. It's our job to pair you with that product, make sure that you have something that you can afford, and also, put you and your family in the right direction to building generational wealth. So that'll be my parting words. I think that, we definitely will visit again, as we accomplish any additional hurdles for clients so that we can get this information.
Okay. Well, thank you so much. Have a great rest of your day. And definitely we'll talk to you soon.
Thank you. Thanks for having me.
No problem.